Okay, let's now start with a Kashi chapter. I think there are some four extra questions in this chapter. You keep going through these four questions now. Let's start with the first question. Go through question one. Go through the problem one. Okay, A Limited produces a single product X during the month of December 2021. Company has produced 14,560 tons of X. Details for the month of December 2021 are as follows. Material consumed 15 lakhs, power consumed 13,000 units at 7 per unit, diesel, wages and salaries, gratuity and leave encashment, hiring charges paid for hem is maybe the machinery, I think, hiring charges paid for cars, reimbursement of diesel cost, hiring of cars, maintenance cost, AMC cost, TA and DA and hotel bills. Prepare a cost sheet. Compute earnings per man shift and output per man shift. That is earnings per man shift is per person. How much one shift earnings per man per shift is called per man shift. Let's start. Cost sheet of product X. Cost sheet of product X for the month of December 2021. For the month of December 2021, particulars calculation amount. For the month of December 2021, particulars calculation amount. Particulars calculation amount. Start with direct material. Direct material. You can, I don't, let's have two amount columns. I think calculation may not be needed. Direct material, inner column and outer column. Particulars amount. Direct material. Direct material 15 lakhs. Direct material 15 lakhs. Direct labor. Direct labor material is 15 lakhs considered. Direct labor, wages and salaries. Wages and salaries. Wages and salaries. And the gratuity and encashment. Wages and salaries. Gratuity and leave encashment. That is also part of employee salary only. Is also part of employee salary only. Gratuity and leave encashment. So wages and salary is 64 lakhs, 44 lakh 20,000. 1 crore 8 lakh 20. 108 10820. Direct material, direct labor is concerned. Your gratuity, wages and salary is considered. Gratuity and leave encashment is considered. Now let's come to direct expenses. Now here there is a possibility of an alternate solution also. There is a possibility of an alternate solution. items like power cost, diesel cost, and hiring charges. I think all the three ICI took it under direct expenses. Depending on the industry and the materiality of the expense, this can even go to an area called as sorry this can even go to an area called as factory overheads. I'll take it as per ICI solution. Power cost 13,000 units into 7, 13,000 into 7, 91,000. Power cost 13,000 into 7, 91. Power cost 13,000 into 7. Diesel cost 1000 liters into 93. 1000 liters into 93, 93,000. 1000 liters into 93, 93,000. And hiring charges. Hiring charges can also go to factory overheads. Hiring charges of this machine, hem is I assume is the machine. So that hiring charges also we are taking as part of direct expenses. We are taking it as part of direct expenses can be taken to factory overheads. Hiring charges 13 lakhs. Together we will get time cost. Together you will get time cost. Time cost is 1 crore 38 lakh 4,000. Time cost is 1 crore 38 lakh 4,000. Have given effect 0.123456. Hiring charges of car, I can take it mostly to administrative expense. Diesel cost for the car, hiring of cars attract GST, all this will come later. Maintenance cost paid for weighing bridge. Weighing bridge maintenance cost should ideally go to a category called as your selling and distribution, because this is incurred for dispatch related cost. This is related to dispatch. AMC cost of CCTV installed at weighing bridge. Weighing bridge again will be selling and distribution. Factory premises. So AMC cost for factory premises. Factory overheads. In that I have AMC cost for factory premises. Whatever you have incurred for factory premises, whatever has been incurred for factory premises will come here. You get GWC, NWC, COP, COGS. I don't have items like your opening WIP, closing WIP, opening FG, closing FG, and those 5 line items used to be there. Quality control, primary packing, research and development, your scrap related, all those items are not there. General and admin overhead. General and admin overhead. General and admin overhead. So we will capture this general and admin overhead now. In the general and admin overhead, I'll have this hiring charges for the car. Hiring charges for the car. Hiring charges for cars related to your office. Reimbursement of diesel. Reimbursement of diesel. And GST under reverse charge mechanism. We saw this reverse charge mechanism in one other question we did. There also we had this reverse charge mechanism GST, and for which input credit is not available. So reverse charge is 80 plus 20, 1 lakh into 5%. 1 lakh into 5%. 1 lakh 5,000 general and administrative overhead. 1 lakh 5,000 general and administrative overhead. So we have given effect 0.789. AMC cost is considered, and selling and distribution. Here also we have few categories of cost. Selling and distribution overheads. In selling and distribution, I have maintenance cost for weighing bridge. Maintenance cost for weighing bridge 7,000. Maintenance cost for weighing bridge 7,000. AMC cost for weighing bridge. AMC cost for weighing bridge 6,000. That is the AMC cost not for weighing bridge, but is the AMC cost of CCTV. AMC cost of CCTV. TARDS travel allowance and hotel bill for sales manager. Sales manager. So TA for sales manager. Sales manager is selling and distribution. If it's factory manager, it would have gone to factory overheads. All put together, you will get cost of sales, profit, and sales. Cost of sales, profit, and sales. I think sales data is not there in the question. So we may have to end with cost of sales. May have to end with cost of sales. I think sales information is not there. Let me just check it again. I think sales information is not there. We will have to end with cost of sales. Material consumed, power, diesel, wages, gratuity, hiring charges, reimbursement, hiring costs, maintenance cost, TAD. So nothing is there. So cost of sales, I think we'll end with here. 1 crore 39 lakh 56,000 is the cost of sales. 139.56 is the cost of sales. We don't have information on the sales in this question. Cost of sales is 139.56. Apart from this, question has asked for two things. Earnings per man shift. First, I hope you are done till this. Any doubts till this? Any doubts till this? Number of man shift is equal to, man shift is 1 day is one shift. 1 day is one shift. So 180 employees into 26 days into one shift per day. Sometimes you can have even two shift or three shift. 180 employees, number of man shift is equal to 180 employees into 26 days into 1. 180 into 26 into 1. 4680 man shift. 4680 man shift. 4680 man shift. Earnings per man shift is equal to, overall earnings employees had was 1 crore 8 lakh 20,000 divided by 4680 man shift, divided by 4680 man shift. Can you tell me this number, earnings per man shift? Divide and let me know. 10820 by 4680. Please tell me the number. Hello? Friends, please. How much is this number?
2311 2312, sir.
3?
12.
That's all. Let me just.
Sir, approximate சொல்றேன் sir.
Okay. Divided by 4680. 2311.97. Take a rounded off. 2311.97. You can keep it. Output per man shift is equal to, we have produced 14,560. Output is 14,560 by 4680. 14,560 by 4680 divided by 4680. 3.11 ton. 3.11 ton per man shift. 3.11 ton per man shift. 2312. Yeah, it was rounded off to 2312 and 3.11 tons per man shift. We have not calculated the profit or loss because data is not there for the same. Profit and loss data is not there. Let's move to question 2 then. Any doubts in question 1? Any doubts in question 1? Let's start discussing question 2. Go through the problem. I'll discuss few aspects and then you will start doing it. You may do this part. You please go through this. Go through the question. Go through the question. Okay. CT Limited is engaged in producing medical equipment. Furnish the following data: opening stock, purchase, less closing stock, opening WIP for that units are given, and closing WIP, direct employees wages. This will go to direct labor. This is a separate line item. R&D expenses a separate line item. Consumables is a factory overhead. This is a separate line item. Selling expenses will go to selling and distribution. Royalty paid for production, this will go to direct expenses. Royalty is normally taken as direct expenses. Website cost will go to selling and distribution. Secondary packing is also selling and distribution. Normal scrap of 250. Scrap of raw material, there are two types of scrap. Scrap of raw material will be deducted from direct material, and scrap arising out of manufacturing process is a separate line item when you after your NWC. That is a separate line item after NWC if we have something called as scrap arising out of manufacturing process. Finished output was sold at a profit margin of 20% on sales. So your profit is 1 by 5 on sales, 1 by 4 on cost. We are required to prepare a cost sheet which gives us prime cost, GWC, factory cost is NWC, factory cost is NWC, profit and sales. Let's start. A sheet of CT Limited. A sheet of CT Limited. Particulars, units and amount. What is the use of this units? I'll understand this question. This units will be useful, you will understand this. Particulars, units and amount. Particulars, units and amount. Units and amount. You'll understand the usage of units in some time. There is some importance of this units data in the question. Particulars, units and amount. Start with direct material. Direct material. Direct material. Opening stock, 1000 units, values 90 lakh. 1000 units and values 90 lakhs. 1000 units, 90 lakhs. Add purchases. Add purchases. 49,000 units. 44 crore 10 lakh. 44 crore 10 lakh, 49,000 units, 44 crore 10 lakh, less closing stock. Understand the importance of units in some time. Less closing stock 1750, 1 crore 57 lakh 50,000. Closing stock 1750, 1 crore 57 lakh 50,000. 1 crore 57 lakh 50,000. Less scrap. What they mentioned is the scrap of raw material, not scrap arising out of manufacturing process, 250 units. 250 units which will be sold at 5,400. 250 units sold at 5,400. So 250 sold at 5,400. Direct material, direct material. This will give us raw material consumed. Raw material consumed. There's a reason for tracking the units. You will understand this as we proceed. Understand the importance of this as we proceed. Raw material consumed 48,000, 43 lakh 29,000. Then I have direct labor 6 crore 68 lakh 50,000. 6 crore 68 lakh 50,000. Direct labor 6 crore 68 lakh 50,000. So we have given effect to this, and this extra data. Work in progress also, they have given the units. There is some reason for that. Direct expenses, direct expenses, direct expense figure given in the question is royalty is the direct expense. Royalty is the direct expense. Royalty is the direct expense. 3 crore 64 lakh 50,000. Royalty is the direct expense. 3 crore 64 lakh 50,000. We will get prime cost. Sorry, we'll get prime cost. This was one of the requirement of the question to calculate prime cost. Side by side, I write the number of units also. 48,000 units. Prime cost is 48,000 units. We are incurring for 48,000 units so much of prime cost. Prime cost 48,000 units. Factory overheads bracket consumables. Bracket consumables 3 crore 42 lakhs. Consumables 3 crore 42 lakhs. Primary packing will go as a separate line item. R&D is a separate line item. AOH relating to production is a separate line item. Selling website secondary packing will go as selling and distribution. All this is gross works cost. Gross works cost. Gross works cost. Add opening WIP less closing WIP. Get net works cost, otherwise called as factory cost. Get net works cost, otherwise called as factory cost. Net works cost, otherwise called as factory cost. Opening WIP figure is 2,000 units, 1 crore 75 lakh 50,000. You'll understand the importance of units in 2 minutes. Minus 1,000, 94 lakh 50,000. 94 lakh 50,000. 9,000 units and 54 crore 20 lakh 50,000. Just give me 54 crore 20 lakh 50,000. Just a minute. Sorry. If there are errors, please highlight it to me. You don't leave because this simple error you could have highlighted me. I'm also now getting a doubt whether you are connected, not connected, whether you're noting down things or not noting down things. So in case there are any errors, please do highlight it to me. If there are mistakes made, you will have to highlight it to me. 4329. I think I did not add this item. I've added it now. Factory overheads is 3 crore 42 lakhs. Gross works cost, net works cost 5785. You will understand the importance of these units which you have calculated side by side because some of the expenses are based on units. Items like primary packing. Primary packing 49,000 units into 1440. 49,000 into 1440. Unless we had tracked the units, we cannot write this. 49,000 into 1440. R&D expenses. R&D expenses 2 crore 10 lakh 60,000. R&D expenses 2 crore 10 lakh 60,000. AOH relating to production. AOH relating to production 3 crore 15 lakhs. We get COP slash COGS. Opening and closing stock in the question. COP slash COGS. COP slash COGS. If there are any errors, please highlight it to me. I don't know why you guys did not highlight this error to me because now I'm getting a doubt whether you're with me or not in the class. So if there are errors made, please highlight it to me. COP slash COGS. Admin, I think nothing is given. Relating to production, we have captured it already. Selling and distribution overhead. Selling and distribution overheads. In that we have selling expenses 4 crore 84 lakh 30,800. 484 800. Website cost 60 lakh 75,000. And secondary packaging. Again, that units helps us 49,000 into 225. 49,000 into 225. Cost of sales, profit, and sales. The tracking of units has helped us in calculating the primary packing and secondary packing cost. Primary packing and secondary packing we could calculate only by tracking that number. Cost of sales 76, 71, 50,800. Profit given in the question is 1 by 5 on sales equal to 1 by 4 on cost. Profit is 20% on sales. It will become 1 by 4 on cost. That's all I think. Numbers should match unless there are calculation errors. If there are any errors, I don't know, but otherwise the number should match. Sometimes I also do typing mistake in the question. Sometimes all that happen. So I remember some 2 3 questions that had happened. I unfortunately did not correct it in the material till now. Your raw material consumed is 4329, which matches 6. Direct labor is 688. Is again you did not highlight, right? Okay, so this there is a typing mistake here. It is 688. There is a typing mistake in the question. Direct labor is 688. Please change it. Numbers will change. The numbers will undergo a change. I'm sorry about it. 688 is the direct labor. 688 is the direct labor. Yeah, then the answer is matching. 688 should be the direct labor figure, not 668. In the question, please make a correction in the question. Sometimes it happens. Please make a correction in the question. 688. Hope this is clear. If there are doubts, please let me know. For any doubts, please let me know. The numbers is 688, not 668. There was a typing error in the question. Let's come to question 3. Following data relates to the manufacturing project received for the budgeted output of 19,600 units. You are required to calculate the selling price per unit, covering a profit of 25% on the selling price, direct material, direct wages, variable overheads, bonding department, finishing department, fixed overhead production, selling and administration, selling and distribution, and administration general. Go through this. Go through the question. Just need to respond to something. You keep going through the question. Okay. This problem we are required to a cost sheet. Following data relates to the manufacturing project received for the budgeted output of 19,600 units. You are required to calculate the selling price per unit. So we will do cost sheet per unit. Cost sheet per unit. Direct material cost is there. Direct wages is there. Variable overhead. You will do some recovery rates calculation and try to do it. Let's start. Cost sheet. You can say computation of selling price per unit. Computation of selling price per unit. Particulars calculation amount. Particulars calculation amount. Particulars calculation amount. We'll start with direct material. Direct material, 40 square meters into 10.6. 40 square meters into 10.6. 40 into 10.6. Direct wages, bonding department, finishing department. Bonding and finishing. Bonding 48 hours into 25. All this is per unit. 48 hours into 25 per hour. 48 into 25. Finishing 30 hours into 19. Into 19. Bonding 48 into 25. Finishing 30 into 19. Direct expenses nil. Direct expenses is nil. Direct expenses is nil. And we will get prime cost. Prime cost. This is per unit. All this is per unit. Variable overhead is basically 15 lakh for 10 lakh hours. So I can say 1 rupee 50 paise per hour. 1 rupee. This is called overhead absorption rate. In our overheads chapter, we would have done overhead absorption rate. 1 rupee 50 paise is the OAR. And here the OAR is 1. 6 lakh by 6 lakh. 6 lakh divided by 6 lakh, the OAR is 1. Bonding department variable overhead is 1 rupee 50 paise and finishing department is 1 rupee per hour. 1 rupee 50 paise and 1 rupee per hour. So variable overhead, I'm assuming this is factory overhead. Okay, I'm assuming this is factory overhead. Bonding finishing, bonding and finishing. Bonding is 1 rupee 50 paise and finishing is 1 rupee. 1 rupee 50 paise and 1 rupee. 72 and 30. 48 into 1.5, 30 into 1. After prime cost, I'll have to add factory overheads. We have one more factory overhead, production. 15 lakh 68,000 is for 19,600 units. We are doing calculation per unit. We are doing the calculation per unit. So fixed production overhead, fixed production overhead, 15 lakh 68,000 divided by 19,600. Divided by 19,600. So we will get GWC, NWC, COP, COGS. Gross works cost, net works cost, cost of production, cost of goods sold. All this per unit. Everything is per unit. All computation has been done at a per unit level. GWC, NWC, COP, COGS per unit. COP, COGS per unit. Selling and distribution. Selling and distribution overheads. 7,84,000 by 19,600. Divided by 19,600. And administrative and general overhead. Administrative and general overhead. 3,92,000 by 19,600. You will get cost of sales, profit and sales. Cost of sales, profit and sales. Cost of sales, profit and sales. COS is 2436. Profit is 1 by 4 on sales, 25%, 1 by 3 on cost. This gives me the selling price. Again, guys, please highlight if I make anywhere errors, because sometimes in a hurry it can happen. Cost of sales, profit and sales. Sales is 3248. Selling price which we are going to fix is 3248 per unit. The selling price fixation is 3248 per unit. Let's go to the last question of the cost sheet. Let's go to this question. I hope there are no doubts in question 3. Following data is available from the books and records of A Limited for the month of April 2022. Stock of raw material purchased, manufacturing wages, depreciation of plant, expenses for quality control, lease rent of production asset, administrative overhead relating to production, expenses for pollution control, stock of raw material, primary packing, research and development, primary packing for redistribution of finished goods, advertisement. Stock of finished goods as on April 1, 2022 was 200 units at a cost of 28,000. Entire opening stock has been sold during the month. Production is 3,000. Closing stock is 400. You are required to prepare a cost sheet which will give you raw material consumed, prime cost, factory cost, COP, COGS, COS, and selling price if I want a profit of 20% on sales. Go through the question. Please go through the question. Okay, we are required to prepare a cost sheet. In this, I'll just explain one important part. Say stock on finished goods on 1st April was 200 units. That is, you had an opening stock, and the entire opening stock has been sold, which means the entire closing stock which will be there will come from the current year production. Entire closing stock will come from current year production. That means it is FIFO method. That means it is FIFO method. During the regular class, I would have told you that whether to follow FIFO or weighted average is an important assumption area in cost sheet for stock valuation. FIFO or weighted average becomes an important assumption area. In this question, the question clearly says whatever opening stock is there, it has been fully sold. So if you have sold the opening stock during the month, if you have sold the opening stock during the month, then the entire closing stock comes from current year production, which is basically FIFO method, Let's start. A sheet of A Limited, a sheet of A Limited for the month of April 2022. A Limited for the month of April 2022. Reckless calculation amount. Cost sheet for the month of April 2022. Direct material. Direct material. I can have two amount columns itself. Calculation is not needed here. Direct material. Opening raw material. Opening raw material 10,000. Opening stock of raw material 10,000. Add purchases. Add purchases 2,80,000. Opening raw material 10,000. Add purchases somewhere closing raw material could be there. Yeah, it is here. Less closing raw material. One area where you'll have to be cautious is scrap. If they use the word scrap of material or raw material, you'll have to deduct it here. Scrap arising out of manufacturing process or only the word scrap, then it is one of those 5 line items. Less closing raw material 40,000. Outer column is raw material consumed. Outer column is raw material consumed.
One doubt, sir. Whether it is given as abnormal loss means what we have to do.
Abnormal loss will normally not be given, but in case they give, we normally ignore all abnormal items in costing. So it will not form part till cost of sales. Profit will be calculated and then that profit has to be adjusted for abnormal loss. So abnormal loss we don't normally record in costing. Okay.
Okay, sir. Thank you.
And direct wages 70,000. There is this item lease rent of production asset. This can go as direct expenses, can also go to factory overheads. I think in this question IC has taken factory overheads, but alternate answer is possible. See, the logic is if you are going to pay lease rent for every unit you produce, then it's a direct expense. If it's a lump sum payment, then we take it as factory overhead. So practical world, I'll have extra information to decide it. In class or in exam, you don't have a choice. So this lease rent classification can change. Based on that, your prime cost amount can also change because one of the requirement is prime cost. So our solution can change. I don't have a choice. Direct expenses, I'm taking it as 0. The logic that lease rent of production asset will go to factory overhead. I think that's what I say I did here. We'll see in some time. Time cost 3,20,000. Factory overhead. Time cost 3,20,000. Factory overhead. Multiple items. Depreciation on plant. Depreciation on plant 15,000. Quality control is a separate line item. We have a separate line item called quality control. Lease rent of production asset. Lease rent of production asset. This can go to direct expenses. Lease rent of production asset can go to direct expenses. Pollution control. Pollution will happen at factory. Quality control is a separate line item. Pollution control is not a separate line item. Pollution control. I don't have a separate line item called pollution control, so I'm writing here. Expenses paid for pollution control. 1,000. Primary packing is a separate line item. Research and development is a separate line item. Packing cost for redistribution is called secondary packing. Advertisement expense. So that is selling and distribution. So let's put a total here. Gross works cost. Sorry, factory overheads outside total will come and then gross works cost. Factory overheads outside total and then gross works cost. Gross works cost. Only thing I see where my answer can deviate from the ICA answer is on item called your lease rent of production asset. The answer can be different. I think there is no opening and closing WIP in this question. So this is also called as net works cost. And then we have those 5 line items. After this, we have those 5 line items. AOH relating to production, administrative overhead relating to production, 15,000, quality control cost, quality control cost, 4,000, primary packing cost, primary packing cost, 8,000, research and development cost, 5,000. The 5 line items, the 5th line item is scrap for recoveries, which is not there, so I'm not writing. Cost of production, cost of production, 3,78,000. Cost of production, 3,78,000. COP is 3,78,000, which is for 3,000 units. This number is critical. 3,000 units means 1 unit is 126 rupees. Add opening G less closing FG, cost of goods sold. Add opening less closing, cost of goods sold. Cost of goods sold. Opening FG is 200 units. Opening FG is 200 units. Closing is 400 units. These 400 units has a valuation of 126 because we are following FIFO method. We are following FIFO method. Entire closing stock is going to come from current year production. Entire closing stock will come from current year production. So my closing FG is 400 units into 126. Why 126 is 378 by 3,000. If it is average cost, then we have to do 28,000 plus 378 divided by 200 plus 3,000 and get the cost per unit. So FIFO method vis-a-vis weighted average cost method. Question: if the problem is silent, you can follow either of the method. This problem is not silent. They have mentioned that the entire opening stock is fully sold. Entire opening stock is fully sold. So whatever closing stock is there, it has come from the current year production. Cost of goods sold. This is technically 2,800. How 2,800? 3,000 plus opening is 200 minus 400 closing. So what we have sold is 2,800. What is sold is 2,800. Then general and administrative overhead. General and administrative overhead 0. Selling and distribution overhead. Selling and distribution overhead. Items is there. Advertisement and secondary packing. Packing cost for redistribution is secondary packing. Secondary packing. Secondary packing. Advertisement and secondary packing. Secondary packing is cost incurred for redistribution. cost of sales. So this is again for 2800 units. So they wanted raw material consumed, prime cost, factory cost, COP, COGS, COS, all that is done. And selling price, if you want a profit of 20%, add profit, sales. Profit is 1 by 5 on sales, 20% equal to 1 by 4 on cost. 1 by 5 on sales, 1 by 4 on cost. 1 by 5 on sales equal to 1 by 4 on cost. Selling price divided by 2800 divided by 2800. This, I think this question gets over. Uh, Answer is matching. Any doubts on the cost sheet question? Any doubts on the cost sheet problems?